I've been giving a lot of money tips and investing tips for quite a while now, so I wanted to take a look and see if the advice that I have given in the past and that I give now is still good advice. Does it actually work to keep things so simple regarding your money and regarding investing your money? We're going to take a look at an older video that I created and see if you had actually followed that advice, where you would be today with your money. I am Tiffany Thomas with WealthyTiffany.com, and I achieved financial freedom at age 38. So if you are looking to achieve financial freedom at a young age as well, hit that like button and hit the subscribe button, and we're going to dive right in. I like to keep things pretty simple around here. I talk about investing in one stock fund and adding a few individual stocks if you're really passionate about those companies. And then if you want to reduce your risk, I talk about adding a bond fund to your investments. And if you have any interest in real estate, then I talk about getting started in real estate investing and keeping that very simple by just investing in buy and hold properties for the long term. Let's talk about some advice that I gave back in May of 2018 in a video that is uploaded to my channel, which you can still watch if you want to. Just as a side note, it is an older video. I'm sitting on my couch holding my phone, so there you go. In the video, I share what I would recommend if I had $10,000 to invest, and the suggestions that I gave in that video are still relevant today. In the video, I recommend investing in 4 different stocks. The first one is Amazon, to buy a few shares of Amazon and then a few shares of Google, and then put the rest in Netflix and in Facebook. I actually own all of those investments and still think they are great. The reason I am suggesting to invest in those individual stocks is because I had seen such a great return with all of my individual stocks versus the index fund that I was also investing in, which is still a great fund, and we're going to talk about that in just a minute. But I want to share where you would be today if you had followed my advice back in 2018 and invested in those companies. All right, if you would have purchased 3 shares of Amazon, you would have spent about $5,000, and you would have seen that money double. So you would have had a 108.80 increase on that $5,000 that you put into Amazon. And then if you would have bought about 3 shares of Google, that would be about $3,000. You would have seen over 110% increase in your investment. So you would have $6,304.93 worth of Google. And then if you would have invested about $1,000 in Facebook, you would have seen over a 63% increase. So your $1,000 would have turned into $1,630.27. And then if you would have invested $1,000 into Netflix, you would have seen a 44.87 increase on your money. So you would have $1,448.66 worth of Netflix, which would give you a total amount of $19,823.94. So you would have almost doubled your initial investment. I felt like back in 2018, those would be good companies to invest in. They are pretty stable companies. They're in the technology sector, which continues to grow because our economy continues to move more toward using technology. So I still like those investments and personally own all of those investments right now. And yes, the stock market has continued to go up. So if we were looking at this when the stock market had crashed, then all of these investments would be down, but so would everything else. And like I mentioned before, the reason I chose to recommend these 4 different stocks was because I had seen such greater returns on my individual stocks rather than on the index fund that I was invested in, that I still am invested in. But here's the thing, I'm not always suggesting to invest in certain individual stocks, but I want to keep your investing as simple as you want to keep it. So that's why I like investing in an index fund as well, because you have such a diversification. You don't have to watch your individual stocks. You're just investing in a simple fund. And if you want to know which fund that is and why I like it, I did create a video for you. So I will leave a link above and below in the description, and you can check that out later on. And let's take a look and see where we would be with our money if we chose to keep it very, very simple and just invest in the one index fund, in the Vanguard Total Stock Market Index Fund. If we would have invested that $10,000 in just the Vanguard Total Stock Market Index Fund, we would have a total amount of $16,068.23. It's over a 60% return. The only stock that was lower than this was Netflix at 44.87%. So while that is still a good return, if we would have only invested in Netflix, we would have underperformed the Vanguard Total Stock Market Index Fund. So that is why it is still a good idea to invest in an index fund, and then you can add your favorite companies, your favorite individual stocks, to your investment portfolio only if you want to. And that's also why we don't want to put all of our money into just one individual stock. So you can still invest in just a single index fund and keep your investments super simple and create great returns over time. I personally invest in that fund still, and then I have a few stocks, no more than 10 individual stocks, that I like to invest in. And of course, it is always more risky to invest in individual stocks because if that one company does go bankrupt, then you would lose your investment. Honestly, we can keep our investments super simple and still make really good returns on our investments. We can do it ourselves because we are keeping it so simple that it won't take a lot of time to manage. We don't need someone else to manage our money because we are the ones that are going to care the most about our money. And I'm not saying I have a magic 8-ball and I know all of the best investments to choose and when to choose them. That is not what I'm saying at all. I'm just saying we can keep it simple, we can invest in things that we know that are stable and make really good returns on our money. And we don't need other people to manage our money for us because they will take a percentage of our money, our hard-earned money, and we don't have to outperform them because we would be paying them a certain amount to manage our money. So we can use that money to our advantage and have more of our money invested, and we get the returns on all of our money. And then of course, like I said before, if you have any interest in real estate, you can also get started in real estate investing. But here's what I don't want you to do. I don't want you to leave all of your money in a savings account because your money will not work for you. So let's take a look and see what would happen if we took that full $10,000 and left it in a savings account. I looked to see what interest rates were for savings accounts back in 2018, and Ally had an interest rate of 1.45. So let's just say that you had a 1.45% interest rate on your savings account, which is not accurate because we know that interest rates have dropped significantly recently. But I'm just going to show you this example, best case scenario. If you would have left that $10,000 in a savings account earning 1.45% interest, the total amount you would have is $10,444. So that is a significant difference from $16,000 to almost $20,000. Hopefully you can see the importance of investing your money. And of course the stock market will go down, but over the long term it goes up. So there's ups and downs throughout, but the trend goes up. And if you are worried about the stock market crash, then check out the video that I recently did about how to survive and prepare for a stock market crash. I'll leave a link above and below, and you can check that video out later. And as a side note, by keeping your money in a savings account, you're actually losing money because you're not even keeping up with the inflation rate. As you've probably noticed, prices continue to rise on things as time goes along. So if you want to have your money keep up with inflation with those rising prices, you need to have your money invested. And you can keep it very, very simple, as I have mentioned. And I was actually talking with a client recently, and she had mentioned that she felt really stuck because she had decided to invest in a lot of different things, and she had gotten advice from a lot of different people. If you make it complicated, you're going to feel overwhelmed and feel stuck, and then you won't be able to move forward. And we don't want that to happen. We want to be able to invest our money, and the way to do that is to keep it simple. If we don't complicate our investments, if we keep it very simple, then we don't have to spend a lot of time managing our investments. And that way we have time for other things that we enjoy more, maybe traveling or Zumba or spending time with family, or whatever it is that you like to spend your time on. Comment below and tell me if you are going to keep your investments simple. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. Thanks so much for watching. I'll see you in the next video.